following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to an exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. The koala bear of Wall Street is just a nice, cute, cuddly teddy bear out here. And yes, the Power Trading Hour, soon to be a major religion for many. We've got a market not moving that much. Of course, we were down a little bit further. This morning, we're off about 2 points on the S&P cash. Got to a low of 2031. Let's call it 2032 on the S&P cash. Pretty close to the open. Less than 2 billion shares as we start to show 1.96 billion shares on the consolidated New York Stock Exchange tape, a little over 1 billion on the NASDAQ. But for the most part, I look at the NYSE consolidated tape as the volume. As long as you're doing apples to apples, it's a big enough sample that it won't matter. Of course, only about 1/4 to 1/3 of stocks are now traded on the NYSE itself. So if you're only doing NYSE volume, you're going to see much lower volume, like 600 million, maybe 800 million. It's just so much cheaper and more efficient to trade off of the ECNs and off of the New York Stock Exchange trade, and the fees are so much cheaper. So a lot more volume elsewhere, but 30% of a big number like that is still going to be 1 or 2% plus or minus. So it's not like using floor traded volume is bad. It's just different. You just need to do the apples and oranges. On this day in 1901, J.P. Morgan and James Hill from the Northern Securities Company told the stock of the Northern Pacific and Great Northern Railways, one of the high water marks of a monopolistic robber baron era. Within 4 years, the U.S. Supreme Court will declare Southern Securities in violation of the Sherman Antitrust Act, and the company will be broken up. Pretty interesting because, of course, I'm doing the audio version of Reminiscence of a Stock Operator. And there's pretty much a big chapter where he loses about $50,000, which is all he had in 1901, in a matter of about 12, 14 hours or so. And knew exactly what the market should do. Timing was a little off, bet the entire wad, and it was gone. And old Jesse was starting to learn about how you had to both go short and long, and you had to anticipate the major market moves, at least at his level, when you may not get your execution for 30 minutes or longer, especially on days like this in 1901. But anyway, he was pretty sure that the market was going to blow up, so instead of shorting it before he went to bed, or before they closed the market on the day before, he decided to wait till the open, put his order in. It went through about an hour later. Then he decided he was on the wrong side of the trade because the prices had changed so far. So then he bought it back and, of course, was on the opposite side of that by the time it came out, and his 50 grand was gone. For a kid that was in 1901, think just what 50 grand would be like in 1901. And just how far it would go when what a loaf of bread was a nickel and a bunch of other stuff like that. But interestingly enough, I've been reading about it and doing the audio version of it. So kind of interesting to see this thing actually pop up on a day like this. Of course, you have a market not going anywhere fast. If you've been a subscriber of my newsletter, basically telegraphed that fairly early last week and this week. We'll probably have some movement on Friday, and I'm not willing to anticipate it. I don't have a lot of clues what's going to go on. For about a month now, I've been saying that we are looking at a market that's probably going to just dribble up here until the end of the year. I've got a couple of long-term plays in the Tech Insider, and we'll see how that actually works. But one's doing good, one's not. Just not a whole lot of money to be made at these points, but we'll have to keep an eye out on these markets to see how they're moving, and keep an eye on it. So what else do we have going on out here on a slow news day? Of course, the cable stations are doing nothing but watching a guy dangling outside One World Trade Center on a scaffolding that broke. And so, yeah, they're still out there. It's just one big picture of it. What else can you say? There is a very rare amount of time where I'll watch CNBC or Bloomberg and see of anything that's of interest. More than anything, I want to see what they're talking about, the zeitgeist, as it were. So I don't really speak too much about it unless someone says something incredibly stupid, which is pretty much all the time. So it's got to be rather enormously stupid for me to bring up. Or on the rare occasion, someone says something intelligent and puts it together. In about 6.5 minutes yesterday, Raoul Pal, put together probably one of the best macro views of the next few years that I have heard. I'm going to play a short 30-second segment of it. If you would like the links to the videos that I'm talking about, you can email me at path@tfnn.com, and I'll be glad to send it to you. But there isn't a lot of things that I would recommend going to watch on that, and this is certainly one of them. And basically, at a macro break, I think he's got a lot of things correct. One, his terminology. One, he doesn't say that it has to go there. One, he says that there's a high probability that it will do what he's talking about. But let's just play the, it's like a 20-second clip here, and then we'll get on with the show.
You're seeing a pretty massive decline over the next couple of years. That's your call.
Again, the probability is, it's not the certainty, it's no crystal ball, but
sure.
If we start breaking these kind of levels of maybe 121, you're taking out every single person who's ever bought a euro in the last 7 or 8 years. So everybody's making a loss. So in which case, what you get is the high probability of a liquidation event. Now, if that's the case, and knowing what we know about using our fundamental analysis too, for me, it looks like the euro could go to 80 cents against the dollar.
And that could be in the next couple of years.
Yep, he's talking about 2 or 3 years. And a lot of people are wondering how the markets could pull back with the Fed always on the gas pedal. And I guess the idea is if the dollar keeps going up and the foreign currencies keep going down, that's the answer. He also is looking and saying that, if we get back up to levels that we were at before on the dollar, that he could see $30 or $40 a barrel crude. That would probably, I guess the big thing, I would just listen to all the links if you want. In fact, I'll post them here in a second in the den, but you can always email me at path@tfnn.com, and you can get that. In the meantime, if you want to, you can dial me at 877-927-6648. That's 877-927-6648. Email me at path@tfnn.com, or pass a message in the den. It's like passing a kidney stone. Post a message in the den, I think, would be a better idea. Let me find this link. There we go. I will put both of them in the den right now. You can listen to both of them. He did actually such a good job that I think that they had him back later and had to split up the show to do it. So there are 2 different video clips, but both of them, if you're looking for a macro long-term view of how you put economies and long-term things together, if you're interested in trading the yen, I think both of these would be well worth listening to, and probably some of the best analysis I've heard in many years as to the macro outlook of world economies. But he puts it pretty succinctly. I wish I had a lot of time to write this stuff down, and maybe I'll get a chance to do that someday. But pretty much all the things he says, I'm pretty much one to rain on everybody's parade when they come out with predictions. But maybe one of the better scenarios that I think could come true. Raoul Paul, and he's a pretty big shot in huge macro funds out there. He used to be a big shot at Goldman Sachs and now started up his own fund in England, I believe. Also, when we look at gold today, what do we have out here? It's off another $4.60, $11.58 on the latest quote. If gold is going to finish out here, somewhere around here before the end of the year, I'm not looking for any big rally between now. It would do something that it hasn't done in several years. That is, it's going to have back-to-back yearly losses, and it's been 1997 since we've seen that. So we certainly have a protracted retraction in the price of gold. The question is, do we get year 3 out of lower prices in gold? And if you did, I think you could start making the case for a bear market in gold. I am not bullish nor bearish. I have no dog in the hunt out here. I would love for this thing to get blown out to the bottom, but I understand that we could have the death of 1,000 cuts in gold, and that would be the problem, that you just get the drip, 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 drip of constant pullback in commodities. And Andy was writing a article. I suggested the title for it to be the commodity black hole, and I think it came out something like that. But it is the possibility that you can see years of declining prices in gold, in crude, and basically how many companies would go out, and that is one of the problems with. I think our engineers, maybe he's been around those boys will be girls places too often, because he's bringing up RuPaul and the drag race, which I imagine he watches quite phonetically. But this is a Raoul Pal, P-A-L. Other things of interest out here. A sure sign of the apocalypse and the rise of the machines and droids taking over the world and The Walking Dead is PepsiCo has confirmed a report that it is experimenting with a Mountain Dew flavor that incorporates nacho cheese flavored chips. Boy. If America wasn't fat enough already, Doritos flavored soda with probably twice the caffeine and twice the sugar. Ugh. I'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I sent out those links as fast as I could. There is one from JW. Who has a Yahoo address. Maybe you want to give me another email address because this one bounces off of Yahoo. I don't know why it would do that, but Yahoo is not allowing me to send you those links that you asked for. So maybe you'll try yet a different email. Dan from Basking Ridge, New Jersey. That sounds so pleasant.
Yeah.
How are you doing today, Dan?
Doing well, Dave.
Are you just basking in the ridge there? Or?
Well, you know, the sun actually did come out.
That's
so, yes, I guess I could bask in nice and warm. Not Florida weather warm, but it's decent today.
Yeah, that's good. So what's your question here today?
Yes, sir. I was wondering, with the order of the charts, I mean, I was trying to do the math on the NASDAQ composite going back, on a 20-year chart.
Mm-hmm.
And I was trying to see if that would be a butterfly or what level that would have to hit for it to be a butterfly.
For 10 years?
20.
Okay.
I mean, we're like
I may not have that data. I may not have that data back. I think I only have 10 years.
Because I tried to do the math. I mean, we're basically 90% of what we were in 2000. And then, I guess it's like, I I tried doing the ABC up from, the lows of 2002 and just doing some long-term charts. I was just going to see what you think about that.
I really don't see anything that looks like a Gartley pattern on a 10-year. I don't know what you're looking at.
No, the X point would be going back to 2000. A would be 2000 and...
Oh, I got to go back 20 years here.
Yeah, so X would be...
Give me just a second.
No problem, sir.
Okay. Okay. Going back to 97, 96, 95, I don't see anything in this context that would look anything like I guess you could make a case that you're talking about the March 10th, 2000 for the high?
Yeah.
Okay. The problem is that at least if you're trying to apply a mathematical tool, it's going to be problematic. And the reason is that at best case, because of the huge retracement on July 17th, that would be the first possible place that you could probably plant an X. I kind of see what you're talking about here, but let me see if I can correct some of this stuff out. Let's forget the Gartley for just a second. The problem is that a lot of times, especially if you're okay, I think that's what you're looking for. I don't know if you're watching on Tiger TV, but I'll zoom in and out here. You could make a case, I guess it's a Gartley, but you have two problems. One, the C point pulled back way too far. The B point didn't retrace far enough, and we're so far back into the retrace of that March 10th high that the more likely outcome is this thing would go into a butterfly.
Right.
So I see what you're talking about out here.
Because there's really nothing between here and 5100.
Yeah. No, to me, you could kind of get a failure, but I think it's probably beyond the 0.9 retracement, which is kind of the top because it's more likely to actually go retest this top than do anything else now. And that's at 51.32 on the NASDAQ. Now, of course, one of the big problems out here with the NASDAQ is that it's hugely weighted, by cap weighted. And in fact, 52% of everything in the NASDAQ is the top 9 stocks. So is that statistically relevant? And my answer would probably be no. And you've had too many stocks leave this, too many stocks come back in. And that's the real problem with using these real long patterns out here is the, have you heard me talk about the survivorship bias? Are you still there?
Yeah, I'm still here. No, not really.
We'll talk about that when we come back on the other side of the break.
Thank you.
Bye.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we went to break, we were talking about survivorship bias. And it's something that if you are a technical trader, I think you should be aware of. And by technical, I mean that you don't believe in kind of a Swami-like belief in somebody predicting the prices in the stock market. An idea that there's some kind of unknown force moving the markets. I think they're all fairly known. That is, people buying and selling, and their views on the marketplace. I don't think it's any more spiritual than that. Now, one of the things in statistics especially if you're doing it, is knowing that the indexes have a survivorship bias. There is no stock in the Dow Jones that is extended more than 50 years or so. I think the oldest one in the Dow Jones is now IBM, but stocks will come and go in the Dow Jones and the S&P 500 and in the NASDAQ. Of course, in the NASDAQ, you've got, like I said, one of the biggest problems and why I don't spend a lot of time either talking about the volume in the NASDAQ or bringing up the NASDAQ when I start the show off is that there's 100 stocks, but 9 of them make up 52% of the movement in it. That's not really a representative. That'd be kind of like either picking, San Francisco and choosing 100 people there to decide who's going to be the next president, and then 100 people all over the United States. It's not going to be any kind of representative number. In fact, it's probably worse than bad. It's evil in the fact that you are picking a highly biased result at the beginning of your theoretically scientific study. There are about 50 biases that go into any kind of statistics, over 50. I got a huge list of them that I try to go through anytime I write a paper and see if there's some biasship in there, and there's almost always some. The question is, can you get by it? But to me, is a high in 2000 in the NASDAQ hugely significant other than psychologically? The answer is no, because almost all those stocks are gone or different or changed. It's not, in a year or two, 3, 4 maybe, I think you can make a case that people still wanted to get out. If somebody's still in the market from 2000, my guess is it's 1 out of 1,000 people. They've bought or sold by then. Even the people that say they're going to buy and hold forever, I'll guarantee the people that bought and held through the downside of 2000 probably long gone out of the market by now. So is that just an echo of something forever and ago? Yes. Is the movement of the NASDAQ anywhere close to what it was in 2000? I think you can make an excellent case that it's not. To me, 500 stocks in the S&P would be much more representative sample. Why it is a little bit biased to larger stocks, nowhere close to the amount of bias that you have in the NASDAQ. So when I look at the NASDAQ, I know the longer that thing goes in the S&P 500, the longer that goes, the more it's going to drift away from what reality is. And normally I like to look at the last big down trend and the last big uptrend, and that's about as far back as I go in charts. So more of a mathematical argument than one that's emotional. And a lot of people just, well, it worked for me today and I'm using it. Now, can there be a self-fulfilling prophecy on these? If enough people believed it, my guess is that long-term, that echo of traders years ago, probably not very significant in these days. Those people are long gone out of those positions. Can someone hold a position for 6, 8 years? I think the answer is yes. The amount of people holding positions 10 years, infinitesimal. As much as they like to talk about the people who buy and hold, people can't sit on their hands generally for that long. Anyway, survivorship bias is a real thing. It's a logical error. And if you look through a great deal of statistics, as Mark Twain said, there's lies, damn lies, and statistics. You have to go fairly deep into these things to look at them. Of course, statistics are the logic of science. But you have to understand that there are about 50 more of these biases besides survivorship biases, and I would think that at least many of those apply. So scientifically, it would be hard for me to make a case back that far. I would probably look back a few years. I think that there's a fairly decent statistical inference you can make. I don't know if you can prove it. I think you can infer it. At 10 years, I think it would be darn hard to even infer a top back in that market. Anyway, you can give me a call at 877-927-6648. That's 877-927-6648. But check out Wikipedia on statistical biases, and might give you a little bit more idea on at least my thinking on it. Again, I don't think it's provable one way or the other. I think it's logical to believe, though, that most people that were there 10 years ago are not there. And most of my beliefs are that if I get a test of a previous high 3 months ago, that there's probably a much greater amount of people that are willing to either get their cash back or give up because it's come back to the price that they bought it at. So you might find stops on both sides for those people that have ridden a stock to hell and heaven, or heaven and then hell. And that's pretty much it. Anyway, got a lot of stocks that are kind of interesting. I wanted to see how a lot of these done. I don't see a great deal of movement in this market. See a few stocks out here that are testing highs, especially and lows, some biotechs out here. Abbott Laboratories, when I look at this one, I want to go back and look at the September 19th high, $44.20, 6.1 million shares. Tested it yesterday with half the volume, 3.1 million shares. Now it's back into the trading range. Now, did we see a lot of volume come back off? The answer is no, and this has been pretty typical, and why I don't think that there's a huge sell-off coming before the end of the year. I would love for these things that have tested previous highs with not just 10 or 20% lighter volume, but with half volume or even less than half volume, really give up the ghost and blow it up, and the answer is that they are not doing that, at least from what I can see. If you have a lot of charts that are doing it, maybe you should email them to me at tfnn.com. path@tfnn.com, and we'll get an idea on it. What else do we have out here? ASML Holdings. This one's a semiconductor. Another one testing its previous high out here on lighter volume. And are you getting a little pullback? I think the answer is yes. Is it probably hit a high? Yes. Is it going to take the market with it? No. September 18th, 102.43, 1.6 million shares. When we get back up here to the last few days, 721,000, 833,000. Today, 363,000. And you get kind of a little bit of a pullback, but things just aren't happening. Insight Corporation. Another one out here above its previous highs, fairly light volume. February 26, $70.86, 1.7 million shares. So when we look at the last few days, 1.1 million shares, 870,000 shares today. Certainly coming up on it. Now, you did have some good volume back here with 2.5 million shares, and that was back on, what is that, the 30th of October. So you had your sign of strength. So I'm not saying this is probably one you want to short, but at the same time, is that going to be everything that you're going to get out of this thing? Probably close. Any close below $70.86 would probably suggest that you're going to come back down to around $65 on it. What else do we have? Ingredient, kind of, we are seeing a lot of triple tops also. Don't know much about this stock, INGR. Let's look at the profile real quick. What do we have? Together with its subsidiaries, manufactures and sells starch, sweetener, and nutrition ingredients to various industries. So I guess a saccharin-like company. July 30th, 1.1 million shares at 79.88. Went above it with 820,000 shares, and wasn't able to hold that high. Next day, it came down with even higher volume. Pretty much blew through the previous lows out here. It had some huge volume to the downside with 777,000 shares. It's back up here and kind of closing back below the resistance level. So big trading range of about $10 in this one, but doesn't really give any indication this thing's going to break out. But at the same time, you want to see volume come back in it to the downside and not just see it drift slightly higher, which is what I think most of these charts are going to do, or most of these stocks are going to do into the near future. J&J, another one of these stocks, up on very light volume, probably not going any higher. But the question is, how much lower could it go, even though it's tested its high with fairly light volume? September 24th, 108.77, 1.3 million shares. 13 million shares. The most it could muster up here at this high was 9.3 million shares. Hit its high at 109.40 yesterday. But, is it really rolling off here on volume today? The answer is no. The energy in a lot of these stocks, too, wasn't bad on the way up. It was at least equal to the energy on the way down, and that points to a bigger trading range than a huge decline in the stock price. J.P. Morgan, another stock up here. This one was light and a little bit better out here. I suspect that these stocks are probably going to react more to the investigations into them in the near future. The September 19th high at $61.85, 18 million shares. We went above it a couple days ago to $61.93, and it had, 12 million shares compared to 18. Closed a little lower, little gap down today, not a huge one. But again, the volume's really not coming in. 10 million shares. If we get 12 or 13, is there a little more volume to the downside? I think the answer is yes. But does that mean the stock blows apart? I think the answer is no. Knight Transportation. Some of these stocks should just be running like there's no tomorrow based on crude prices dropping. Knight Transportation, a big trucking company across the country. KNX. What can you say about that? Nice spike high that reversed on October 22nd. 1.8 million shares, kind of going through that with 400,000 shares today. Yesterday, kind of got up there with 1.2 million shares, but again, still 30-40% light. Popped above it. Not a lot of volume in the upside either. And these light markets are kind of very much like being out. If anybody has sailed in very light wind, they call it the doldrums. And sailors coming to the United States, well, wasn't the United States then, into the new America, or other sailors around the world, would find out that as they went through certain latitudes, that the Coriolis effect, they didn't know that's what it was called at the time, would cause, maybe 60 or 100 miles to have almost no wind at all. And it would take them sometimes a week to go through a few, maybe 10, 20 miles. And then they would get back into the prevailing winds yet again. And I think we are in those doldrums right now where it is kind of tough to see. Lincoln National Corporation, LNC, see the high volume of September 19th out here, 2.8 million shares. Half the volume yesterday with 1.4 million shares back into the trading range. Again, the energy is not all that bad on the way back up if you look at my power vector numbers. And so it's hard for me to pull the trigger on these. I want them to be congruent. I want these stocks to be saying, hey, I'm very weak down, and I'm very weak down, and I'm very strong down, I'm very weak up, or I'm very weak, I'm very strong up, very weak down. And we're not getting any kind of congruence on these two. I want to know that the personalities, these stocks are not smiling at me while they pretty much hate me to the core inside. I want to make sure that both those emotions, the ones inside their hearts and the ones on the charts, actually match. So I want not only the move to tell me that a stock is strong or weak, and the highs both. And that's kind of putting both sides of this trade together. Log mean breaking through today on fairly light volume. We'll look at this one when we come back. Give me a call, 877-927-6648.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Sam in Irvine, California, how are you doing today?
Hi, Dave. Thank you very much for the great calls last month in your letter. I appreciate it very much. I made some dough. And especially when you explained the asymmetrical bets so well, I understood it now. I can stay away from a shark-infested water and be more careful. My question is about Abbott Lab. You just covered it. This has been a very good stock in the past for me. And on October 15th, the low of the day was 39 and a change. And I was hoping to go back to the $37 again. It didn't, and turned around, and it's been going up. Mm-hmm. My question is, between now and Christmas, because of the Obamacare and all, is it going to go higher? Is it going to stay around? Is it a good time to go in? And I'd like to ask your opinion.
I don't think that there's anything that's going to physically change in these stocks between now and the new year. Even though volume's going to be light. But, is this thing going to go much higher? Probably not. I just don't see you make a lot of money to the downside. I don't know if you can see it if you're watching on Tiger TV, but basically the energy from the September 19th high to the October 16th low was about the same from that low to the current high from November 11th. So we've got a kind of nice V pattern out here. What I want to see in a stock that's going to do something is I want to see a huge change in the energy, either up or down, right?
Right.
If this had a lot of energy or a lot more energy than the last leg down, I'd be waiting for this thing to pull back and then try to play an ABC on the upside, right?
Right.
If this had a lot less energy, then I would consider shorting it right here.
I see.
And it didn't. We've got two things that I look at: the energy between the swing points and the swing points themselves. Now, the swing point's telling us we're at the upper end of a trading range. The volume between those swings is telling us that we're in a larger trading range. And I would think that, you know, right now the best case you could give this thing was a larger trading range. But could it go back up to 46 or 47 before the end of the year? It certainly can. The problem is you've got to get people to start selling this, and you're going to have some kind of major event to make that happen. And betting on a 9/11 in the last 2 months of the year is probably, I think, a fairly bad idea. I mean, could it happen? Could something happen? The answer is yes. Is it probable? It seems to me more like a wild bet than intelligent speculation, if I could put it that way.
Right.
So that is, to me, there are a few things going on right out here. I think that the only real money to be made that I can see going forward is seeing some of these stocks slowly go higher and then get a huge short squeeze at the end of the year. And I've got one stock that's doing well and one that isn't in that vein, but I don't have a lot invested out here. But I would look for short stocks, or I would look for stocks that have huge short interest and have quit going down. And you can buy those fairly safely unless something major happens, which no one can foresee. And just hope that you hitch your wagon to the right horse and you get a huge short squeeze and you make some cash. But other than that, I just don't see a lot of ways to make money.
On this one? Or
go ahead.
On this one, right? You're talking about Amazon.
On most stocks, I would say 98% of the stocks, I don't see anybody making any money on of significance before the end of the year. No asymmetrical bets, as you brought up.
Thank you very much.
Tough time to be trading right now. We'll see you tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.